Revenge Trading, The Dangerous Trap, and How to Break Free. Jordan's eyes stayed locked on the screen, the glow of red candlesticks burning into his mind. The market had taken a turn and his stop-loss hit. Just like that, the trade was over. His hands clenched the mouse. "I'll get it back," he growled. Without a second thought, he opened another position, then another, each one more reckless than the last. It wasn't about strategy anymore, it was about payback. Jordan was caught in the vicious cycle of revenge trading. Revenge trading happens when emotions take over. Anger and frustration cloud judgment, leading traders to make impulsive decisions. The more they lose, the harder they fight. But the market isn't a fight. It's a reflection of discipline and patience. For Jordan, every loss felt like a personal attack. But in reality, the market didn't care. Why revenge trading is dangerous. Revenge trading doesn't just damage your account, it destroys your mindset. Here's why it's one of the most destructive habits a trader can fall into. 1. Emotional decision making. When emotions run the show, logic takes a back seat. You ignore your plan, taking trades based on desperation. 2. Compounding losses. Chasing losses often leads to bigger losses. Instead of controlling risk, you double down. 3. Mental and emotional burnout. Constant stress and frustration lead to emotional exhaustion, lowering your confidence. 4. Loss of discipline. Every revenge trade weakens your self-control, making it harder to follow a well-planned strategy. Jordan wasn't thinking about risk management or market conditions. He was reacting, and the market punished him for it. How to break free from revenge trading. The best traders aren't those who never lose. They're the ones who respond to losses with discipline and resilience. Here's how you can avoid the trap of revenge trading. 1. Accept losses as lessons. Losses happen to everyone. Even the best traders face setbacks. The key is to view losses as learning experiences, not failures. 2. Follow a trading plan. Create a plan that includes entry and exit points, risk management, and clear goals. Stick to it even when emotions try to pull you off course. 3. Control your risk. Never risk more than 1 to 2% of your capital on a single trade. Smaller losses are easier to recover from and won't break your confidence. 4. Take breaks. If you lose a trade, step away, breathe, reassess with a clear mind. The market will always be there. 5. Track your trades, keep a journal. Write down your trade rationale, emotions, and outcomes. Self-awareness is the first step to breaking free from emotional trading. 6. Stay educated, continuously learn. Understand market psychology and technical analysis. Knowledge builds confidence and resilience. Jordan's turning point. After reviewing his trades, Jordan faced the truth. He wasn't losing because of the market. He was losing because of his mindset. The market wasn't his enemy. His emotions were. He made a choice. He created a solid plan, followed strict risk management, and embraced patience. No longer driven by anger, his trades became calculated and disciplined. The losses didn't control him anymore. And slowly, his account began to grow. The market will test you. But it's not about getting even. It's about getting better. What's one lesson the market has taught you? Share your thoughts in the comments below. And don't forget to like, comment, and subscribe to @each1t1 for more trading tips and stories.